What is an ARM? An adjustable rate mortgage. A few months ago, I was working with a young couple, first-time homebuyers, who had just fallen in love with a home here in a lovely community. The layout, the backyard, the neighborhood, everything was perfect. But when we ran the numbers on a 30-year fixed mortgage, that excitement turned into worry. The payment stretched their comfort zone more than they expected. They looked at me and said, "Kelly, is there another option? Something that helps us make this dream happen without pushing us over the edge?" That's when I introduced them to something called an adjustable rate mortgage, or ARM. And just like so, many people's first reaction was, "Wait, the rate changes? That sounds risky." But after we talked it through, they realized it wasn't risky, it was strategic. When used the right way, an ARM can be a powerful tool for smart homebuyers. Hi, I'm Kelly Arriaza, your mortgage and home loan expert with Nexa Mortgage. Today, I'm going to explain what an adjustable rate mortgage really is, how it works, how it might help you buy your next home faster, smarter, and more affordable. Understanding the basics. Let's start with what an ARM actually is, because once you understand it, the concept is simple. An adjustable rate mortgage is a loan that begins with a fixed rate for a set number of years, usually 5, 7, or 10. Then it becomes adjustable based on what's happening in the economy. Your new rate after the fixed period is based on two things: the index, which follows the market trend, like the SOFR or the Treasury rate, and the margin, which is a small set number your lender adds, often around 2.75. If the index is 4% and your margin is 2.75, the rate becomes 6.75%. That's it. Clear, predictable, and structured. Not random. And here's the big advantage. ARMs start with lower interest rates than fixed loans, which can make a huge difference when the budgeting for the first few years in your new home. Why more buyers are choosing ARMs in 2026. Now let's talk about why ARMs are getting so much attention again in 2026. Mortgage rates are still higher than what most buyers want to see. That's made affordability one of my top concerns for homeowners. And ARMs are one way to bring those numbers back down. Because ARMs start with a lower rate, your monthly payment is smaller right now out of the gate. That's extra money in your pocket every month. Money you can use for furniture, renovation, savings, or just a little breathing room. For example, on a $400,000 home, even a 1% difference between a fixed and an adjustable rate could mean savings around $250 to $300 each month. That's real tangible relief. And for people who plan to move, refinance, or upgrade within 5 to 10 years, an ARM can fit perfectly. You enjoy the savings during the fixed period and make your next move before the adjustable phase even starts. So ARMs aren't about taking chances, they're about smart timing and aligning your mortgage with your goal. The power of lowering your start rate is one of the biggest reasons borrowers love ARMs in the lower introductory rate. The initial period, whether it's a 5, 7, or 10 years, gives you predictable payments that are often much lower than a 30-year fixed loan. It's perfect for the buyers who want to get into a home now without overextending their monthly budget. It also gives you flexibility to grow financially while enjoying stability of those first years. Flexibility that fits your lifestyle. An ARM isn't one size fits all. It's designed for people whose lives are evolving. Maybe this is your first home and you plan to move up in a few years. Maybe you're relocating for work, or you know you'll want to refinance when rates shift again. In any of those cases, an ARM will allow you to enjoy the benefits of a lower payment today while keeping options open for tomorrow. It's that balance between flexibility and control that makes it so appealing to first-time homebuyer, military families, and professionals who expect to move or advance in their careers, making qualification easier. Here's another advantage that often gets overlooked. ARMs can make it easier to qualify for your mortgage because the starting rate and therefore the monthly payment is lower. Your debt-to-income ratio improves. That can help you qualify for a little more home or simply make the process smoother. For many home buyers, especially those starting out, that lower payment is what turns a someday home into a today home. Built-in safety features. Let's talk about one of the things people worry about most, the rate increases. The good news is modern ARMs are designed with built-in protections that make them much safer than they used to be. Every adjustable rate mortgage comes with something called a rate cap, which limits how much the interest rate can change over time. There are a few layers of protections built in. First, they're the initial cap, which controls how much your rate can rise the very first time it adjusts, usually no more than 2%. Then comes the periodic cap, which limits how much it can move each time it adjusts after that, typically 1 or 2%. Finally, there's the lifetime cap, which sets the maximum increases over the entire life of your loan, often around 5%. So if you start with a 6% rate, even in worst case market scenario, it can never go higher than 11%. These caps are what's given today's ARMs their predictability and their help to protect from sudden payment shock. Rates can go down too. And here's something people don't realize. ARMs can adjust downward if the market improves and rates fall. When your adjustment period arrives, your monthly payment can actually decrease. This is an automatic benefit that doesn't require refinancing or new paperwork. It's one more way ARMs can adapt to your advantage when the economy shifts. Why savvy borrowers use ARMs strategically. ARMs aren't just for first-time home buyers. They're also a go-to choice for strategic buyers and investors. Investors use them to maximize cash flow early on, while professionals and growing families use them to ease into homeownership with more manageable payments. It's a flexible, intentional tool, not a risk, that can be tailored to your personal financial plan. Understanding the trade-offs, of course. Every mortgage has two sides. Once your fixed period ends, the rate can increase if the market goes up, which means your payment might rise too. That's why having a plan matters before choosing an ARM. Make sure you know your timeline, your goals, and your backup options. If you're planning to stay in your home for 20 or 30 years, a fixed rate loan may be better. But if you want to take advantage of an early savings and expect change down the road, an ARM could give you more flexibility and an opportunity to save, bringing it all together. When you look at the big picture, an adjustable rate mortgage isn't about uncertainty. It's about options. It's a way to start strong, save up front, and make your home ownership journey the life you actually living. Used correctly, an ARM can help you build equity faster, manage cash flow wisely, and position yourself for your next move with confidence. It's not about predicting the future. It's about preparing for it. Now here's a bonus tip. Know your game plan. Before deciding on an ARM, it's important to think through a few questions, and I'll walk you through how to answer them. How long do you plan on staying in this home? If you answer 5 to 10 years, a 5-6 or a 7-6 ARM can be an excellent fit. You'll benefit from the lower rate the entire time you own the home, often without ever reaching the adjustable period. What's my strategy with the fixed period ends? Maybe your goal is to refinance if the rates drop, or to sell when you're ready to upsize or relocate. Either way, have a timeline. Most homeowners with an ARM don't wait for the adjustment. They act strategically before it happens. Can I handle a possible payment change if the rates rise? Here's the truth. If your budget is tight, build a small safety cushion. Even setting aside 1 or 2 months of payment difference in a savings gives you flexibility and peace of mind. When you walk into an ARM with a plan and with a clear answer to these questions, there's no surprises later. You're in full control from start. So if you're curious whether an adjustable rate mortgage could help you buy your next home, or simply make home ownership more affordable, I'd love to help you explore your options. You can call or text me at 801-548-0162, or feel free to email me at kariaza@nexamortgage.com. You can also visit kellyyourmortgageexpert.com and schedule a free consultation. And if this video helped you understand ARMs a little better, don't forget to like, subscribe, and share it with someone who is thinking about buying a home. I'm Kelly Arriaza, your mortgage home loan expert with Nexa Mortgage. Thank you for watching, and remember, your mortgage doesn't have to be complicated when you have the right guide by your side. Let's make a path to home ownership. Simply, strategic, and stress-free together.